Testing, testing, testing. Testing, 1, 2, 1, 2, testing. Testing, can you hear me? Testing. Good morning, everybody. We're having some tech issues here. If you can bear with me here. I believe that we are back on track here. Good morning, everybody. This is Patrick MontesDeOca. We got a fast market in gold trading last at 1843.40. We saw a massive sell-off here early this morning, and now we are basically, we've recommended here just a couple of minutes ago in our Discord trading room here that this is a private trading room that we want to cover all short hedges here at about 6:54, 6:55 a.m. And we're getting basically net long on the market here, and we got a fast market to the upside. Let's watch the market here for a little bit. Fast market in gold to the upside, reversal happening here from B2 level activated. We're entering what appears to be a high level of volatility. Major reversal here in the gold market. The action that we have here today coming into this extreme below the mean of B2 and testing the buy-in underneath there, discovering that there's a lot of interest underneath and coming back up above the average price of 1844, has activated the targets of 1857 to 1864. Massive short covering. This kind of buying here had to be major size to bring the market up from 32 to 45, $10 in a matter of minutes. Somebody with strong hands came in and bought the market and seems to be following through. A lot of the shorts here that we're planning on shorting the market possibly all the way down to 1813 are obviously now covering their shorts. They're running to the exits. This is what you call a reversion from the extreme below the B2 daily, 1843. The market coming down to 32, 33 and reverting right back up above the 43 is a reversion. It's a perfect example of mean reversion. Now that the market is running up above that 1844, it's activated a weekly bullish trend momentum. And the initial target is 48. So if you bought multiple positions or are trading more than one contract in the futures, these are the levels, the pivot points that you can use to exercise your profits. The first target on the daily is 1848. A close above 1848 activates 1857. The weekly signal, the bullish, it's got a bullish trend momentum, which has activated the sell one level below, above, I should say, of 1887. The weekly signal trading above the average of 1844 has activated the weekly target of 1887 still for the remainder of the week. The prices of 1857, 62, 70 are targets in between that trading range that you can use. We seem to have now experienced a correction in the E-mini from 38.62 back down to that 37.63.65, which is now a harmonic alignment that is showing buying interest in the E-mini at 37.65. So the E-mini is long with a target of 38.06. Let's take a look at GBTC, the Bitcoin Investment Trust that we are tracking, and we seem to be getting a little bit of a buying interest at these levels here using the 15-minute signals. The buy one level on the weekly is 21.81. If you want to add to your GBTC or Bitcoin Investment Trust, 29.81 will activate a buy one level from the weekly. Right now, the market is in a buy zone between 29.81 and 25.16. It does not recommend to go short because these levels are the highest probabilities to find interest, to find buyers in the market. The Nugget, which is a double X velocity ETF, is coming down into this average price daily and activating a bullish trend momentum. A lot of activity here going on at these levels. Once again, we've recommended our hedgers in the trading room, our traders, to cover their hedges, to look to get on the long side of the market as it is activating buy signals from the buy 2 and the buy 1 level on the daily. On the daily signals, it's activated a bullish trend momentum, 1844. We have just completed the first target of 1848. So if you bought 1843 to 1848, that stopped you out. Major reversal in gold, in the metals. Let's take a look at the TradeStation platform here. We got up to 49.40. The high so far was 49.50. And prepare for this trading ranges that are going to be historic. And we could be, entering into the beginning or the bottom of that trading range pretty much. 1832 and a half, 1832.40 was the low so far today. $46.70, 47 traded, 1847 traded. If we get above 1848, we're going to be activating the daily signal. So we have pretty much a triple signal above 1848, which is the buy 2 daily, the weekly average, and the buy 1 daily above 1848. $18.62, $18.64 is the sell 1 daily and the monthly average price, which is where I think we're going to go once we get through this resistance of 48. It slowed down quite a bit here, a little bit after a massive short covering that took place early. And one of the things here that I'm looking at, first of all, the gold market is not reacting the way that most people think it should react based on the fundamentals. So it's doing contrary to the sentiment. But the attacks that we see on the short side of the market are short-lived. They bring the market down into these levels and the reversion occurs and we back up $100. And it's happening quite frequently, which means that one of these times the market is just going to take off and explode on the upside. This is my conviction. This is my opinion. And I think the time is getting closer for that to happen. So be prepared. Do not press the downside. Do not press the short side. I think the path of least resistance is to the upside, and you want to buy corrections into this market at this point, into this 1830, 1820, 1810 area, which is the annual average price of 1810. The market is showing extremely now oversold conditions on the daily work, and it's getting pretty oversold on the weekly. And pretty much we're looking at the bigger picture here in terms of where the support is. And since we finished the February contract here, we're going to be moving into the April contract here. But we want to take a look still at the level of buy one at 1816. And which would be equivalent to the April pretty much. So any corrections, any $20 or $30 correction from here on should be bought. And I am sticking my neck out at this point based upon what I see on the VCPMI indicators, long-term, short-term, intermediate, that we are probably not too far away from what could be an explosive move. Where it goes, we're looking at the annual targets that activated a close above 1810, the 2160 area as the sell one level. So we're going to be updating the algorithms here over the weekend with the April contracts, with the March silver contracts. And it's going to be pretty exciting period as we move into February. February so far seems to indicate the possibility of a bull trend unfolding until about the middle of February. So the question is, are we going to see 2150 in February 15? It's about a $300 move from where we are. It would not surprise me, to be honest with you. $29.81 is a buy trigger on the weekly signal for GBTC. I'm recommending our traders in the Discord trading room here to buy GBTC 2981 close above. $48 traded, 48.20 last. We got a fast market in the gold market here, ladies and gentlemen. Prepare for a fast market in gold to the upside. Fast market to the upside in the gold market here. Prepare for volatility. And if we go unchanged for the day, ladies and gentlemen, this is what you call a key reversal in the gold market. And it could be explosive from here. $18.57 next target, 1862 to 1864 is the major pivot points that we're looking to accomplish. $49.70 traded. $18.50 is going to trade pretty fast here. This is a pretty major reversal that we're looking at. With the amount of shorting in the market for the gold market upon expiration of this option contract did not collapse, but instead it's showing a lot more buying interest. It leads me to believe that there are a lot of people that are going to be buying gold through the futures contract. And so the question is going to be, are they going to have enough supplies available? So what we're talking about Testing 1 2 1 2. $49.30 last. $49.30 last. Fast market to the upside. Fast market to the upside. We are into a little bit of resistance based on the Bollinger Band resistance level of about 1851. So let's see what the market does as we try to challenge that resistance and take out the supply that represents at that level. So let's see if we get enough buying interest to bring that resistance all the way up to 1857 to complete our target. Things are quieting down a little bit here, as obviously the market ran up about $15, right into that upper Bollinger Band level, and kind of slowed down here a little bit. So it's going to catch its breath and I believe continue to challenge the supply above the market. That means that buyers are continuing to buy the supply that's being offered up here. GBTC is climbing its way up. 29.72 traded last here, and we want to add to our position here on GBTC. We're trying to break out of this descending wedge that you see here, which is, I believe, the vortex or the end of the wedge, and by trading above 1850, we are pretty much coming out of that resistance level above that wedge. So that's pretty bullish. $79, 79 and a half traded on GBTC. It's getting pretty quiet here. 47.50 last traded. $48 traded in gold. A lot of trading going on here today, which is obviously an indication that these levels are important pivot levels to trade from. The silver market follows the gold market, obviously, in the same direction, but it's got its own criteria based on its market. I'm coming back here to GBTC, which is 29.91 right now, fast market on GBTC to the upside. 29.95, so we're long at 29.81. GBTC is a great trading market. The volatility is tremendous, and you got to manage it according to your profile. But it offers the volatility, which is a trader's dream come true. $31.89 is the target on GBTC. We seem to be getting a lot of volatility back into GBTC here. 31.89. Is the target here for the day. Fast market on GBTC. $49.10 traded in gold here. $49.10 traded in gold. The market is moving up above the buy one level. $49.50 on gold. $49.50 traded. Excuse me. So we seem to be getting interested buyers to inch their way up here. I think when we take a look at the daily chart, you can see more or less how the market reacts to these levels here between the Fibonacci fan line sequence that we use, the Fibonacci retracement. And right now, it's come down to about a 50% Fibonacci retracement on GBTC from the low that we saw so far to the recent high of 48.65 for the period here. This low of about 960, which happened on October of last year, $10 roughly. It's at $48. That's amazing on the high. And we're getting now trading last at 30.14, some buy-in interest, and it appears that maybe the market corrected 50% Fibonacci retracement, and it's getting ready to challenge once again the highs of 48.65. So let's get a little more confirmation here as we are beginning to see a bullish pattern here being completed in GBTC. The gold market, as you can see, came down below the Fibonacci trend line, tested it, came right back above it. And that is, to me, an indication that the market has resilience underneath. What we want to see is this bar turn green, like here. And I think this will validate and confirm that pretty much this is the third time that they try to come down to make new lows, and they can't do it. The market is showing resilience at higher levels. The market is making higher highs and lower highs. So we are compressing into what I believe is a bullish trend unfolding. The energy is compressed down here, oversold. The selling pressure cannot bring the price down below 1813 anymore. So what's the next thing? Well, let's see the upside. Let's try to see where the resistance is, the ceiling is. Now that they've wiped out just about every nervous Nelly out there, every weak buyer has been stopped out on this move, as opposed to providing the strong hands the opportunity to add to this correction. As I believe we are entering what could be the end of this consolidation that we started back in August of last year from the high of 2089. And so to identify, on a shorter term basis, when the market begins to experience that turnaround, we use the 15-minute bar, and you can see here clearly the market is breaking out of this descending wedge resistance level, and 1857 is the target. Just to review the action for today, the market coming down below 1843 earlier activated a bearish sentiment, bearish pattern below the weekly 1844 and made a low of 1832.40. From there, the market reverted right back above the buy one level, which activated a buy one signal at 1843, traded above the average of 1844, which activated a weekly bullish trend momentum. And now it's trading above 1848, which is the buy one trigger on top of all the signals. So I would say to you, 1857 is my target on the average daily, and a close above 1857 would bring us into 1862 to 1864 once again. $18.57 is my next target. $18.57. This has been a very, very confirming, exciting day. This is what I wanted to see happen here, that the market supply tests this lower level of support, and that we identify where the buyers, the strong hands, are coming in. And obviously, they came in at 1832 here today. We're trading 1852. That's a pretty strong confirmation now that the bottom might be in place here for the short term. But if we get a close above 1864, that is going to bring in the confirmation that the winter lows have been made, and the market is headed up to that 1887 level and target, which is what I am looking to accomplish. Continue to hold your long position. Continue to be patient. Do not listen to the herd out there, because it can get very confusing. Use the VCPMI as a driving tool for you to keep your emotions in control and to show you the highest probabilities where you can make a trade as a self-directed individual using the VCPMI, which stands for the Variable Changing Price Momentum Indicator. Thank you again, ladies and gentlemen, for the opportunity to share this with you, and I sincerely hope, once again, every day you are becoming a better trader. Take care. Be safe. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Steve Collegian here with John Najarian, folks.